The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Wow! Welcome, folks. This is Tom O'Brien of TFNN. We appreciate you growling and prowling with us out here at the Bull and Bear Binary Option Hour, and we have action out here, folks. So we have yesterday, what do? We go south with volume. Right now you get the Nasdaq up 8, the Dow is flat, S&Ps are up 4.5, you get gold up 10.80, we have silver up 88 cents, bonds, you have the 10-year up 6 ticks, the 30-year down 4, King Dollar, she's off 58 ticks at 81.46, the euro's at 1.34, and the yen is trading at 102.79. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, if you haven't test drove the Nadex platform yet, come over to our website, folks, at TFNN.com. You're going to see the banner on the top and the side. You can bring that up right here, right now. They'll put $25,000 of funny money into it. You can trade to get to understand how these contracts work. When we're taking a look at the S&P right now, if you happen to be listening to us yesterday, what we had is this. Intraday, I do the program in the afternoon now, 3 to 5, so the market is open. And what we had happening here, folks, was an ABC structure on the way down. It broke the B point, broke it with volume. The price projection was 1913. We hit 1910.50 this morning, okay? So bottom line is that when you do an ABC price projection, the bottom line, when you get to the price projection, you do something other than continue the same way. Meaning that if we had an ABC structure on the way down, you get a bounce on the way back up. You do an ABC on the way up, you're going to come back down. Now, we're going to trade this baby right now because this is pretty wild watching how this whole thing is shaking out. So, surprises, folks, are going to come to the downside. What do we have right now? This is what you have. You did the full price projection. You're coming into... And what I'm always looking for is high volume bars. Well, at 1550 yesterday, at 1927.70, what do you have? Okay, we have 208,000 contracts inside the mini S&Ps. So what are we looking for now? The first expansion up here just got the futures. We went from the 1910 area up to 1932. Volume-wise, what we've had is that we are you had 9 minutes into this bar right now, and we hit that 1932. We're at 1928.75. Now, what I'd like to see here is this. I want to see one more test of that high out here today, of the 1932. I want to see a test on a 10-minute with lighter volume than we had just now, because we know that the benchmark, or over the benchmark by 3 points with lighter volume. That's the 1927. And yeah, I'm going to be bisecting and dissecting this in a large way. Why? Because what we're looking for, what I'm specifically looking for is this. When we take a look at the S&Ps, if you have the Nadex platform up, when you take a look at those S&Ps out there on the platform, if you take a look at them, that's the US 500. What you're going to see, there's a 10 to 12 trade out there. Now, that 10 to 12 trade, if you're selling, this is a spread I'm talking about, and if you're in there selling that right now, what you could be doing is that what you'd be saying is that by 12 noon Eastern Standard Time, let me see this, 24, that's the 15. Okay, 1 second, let me do the 10 to 12. There's a couple. Okay, if we take the 10 to 12, what we have is this, 1930. I take that 1930, and if we were selling 10 of those, your risk right now would be $330, and the reward was $670. That is what you would need is this. We're giving up 2 points on the S&P. So what I want to see happen here is this. At the 1930, this is the one that would be selling is the 1920 to 1930. What I want to see here is that I want to see this get up to the 1932 with lighter volume and reject that price. And then we'll see what we're going to do contract-wise on that Nadex product. We take a look at the markets out here. This is what we have inside the markets. Okay, so let's go through what exactly happened on the S&Ps. Cash S&P, the SPY right now, low out here today was 192.46. Right now you're up 24 cents. We had the jobs number out. Jobs number came in good, but not as good as the market was looking at that point. Bottom line, you get a bounce. It's a dead cat bounce. It should have bounced. Europe right now continues down. What you're going to see out here today is high volatility, lower markets across the board. What you have, these numbers, folks, are not only being hit, they're being hit nice, meaning they do an ABC structure on the way down, they do a nice counter trend bounce on the way back up, come up to ice, give it up again, come back down the other side. And as I said, I'm looking for another bounce. The market is having a hard time holding these prices here, but getting another bounce, which I suspect we're going to get, and we'll know that very quickly, because if we are not going to get a bounce, what you're going to see here, but I'm not right now figuring that's going to happen, is that the S&P would come down on volume. We're at the 1927.75. I suspect she's going to back off with a little volume here next 10, 15 minutes, then make the run for this 1932.25, and then fail. Okay, that's the way that I'm looking for this trade to get set up, because if we have that, depending on how many minutes it is, me in 10, 20, 30, we'll figure out what contract that we want to trade over in the Nadex platform. What has been phenomenal this week in general is the volatility in the market. The euro, if you've been trading the euro, it's been great trading, meaning selling the euro. Would you have the euro also doing some kind of a dead cat bounce? Euro had already gone down from the 137 mark, got into the 133.79 this morning. You get a small bounce. If we go over to the dollar index, looking at that dollar index, you talk about strong like bull. That dollar index is definitely strong like bull. She's pulling back 19,000 contracts out here today. That 19,000 contracts are going into 53, I believe. 29,000 contracts. Gold, this is going to get intriguing with gold. Why? Because on Fridays, that is when the bottom line, they can take it south. Well, guess what? What you had out here today is that the gold contract rejected lower price. We'll see how the volume comes in. The day of strength in gold, folks, from the 19th of June is 1277. We got to 1281 today, rejected that lower price. Bottom line, what you're going to see out here is that I'd like to see gold close inside 1294.40. Right now we're at 1295.30, so we're inside it. And what that is, folks, that's the higher range. You get inside that, we close inside that, particularly on a weekly basis, it's going to be sweet. Why? Because then the run will still be established to 1347, which was July 10th, as well as the high of the last 6 months, which is 1391. My take here is that what you're going to see is that you're going to see this baby get up into much higher price. We go back to the S&P, and that, I guess that was the trade right there. Bottom line, ESU 4. Okay, so S&Ps couldn't hold it out here. Surprises out to the downside, no doubt. We'll see. It's flat right now, and she's coming back. Yeah, just going to take some patience here. So let's see. We're at. That's good. Okay, so we're 5 minutes into the bar right now, and we've done 43,000 contracts versus 111. You know, she's coming into 119. So this baby still wants to bounce up there. You know, the first couple hours here, we're going to have some volatility. As I said a little bit earlier, though, all said and done, this correction is on number one. When you take a look at the S&P is dramatic, folks, meaning the first benchmark. The first benchmark on the cash S&P is down at 1743. You're talking almost 190 points down. And that's only the benchmark. That's a high volume low that's sticking out there. If we do go over to United Technologies already took that baby out, took it out with a vengeance. Boeing is on its way down there trying to take that February 5th level out. In fact, Boeing, let's see, we hit 120.45, and that's weird. Yeah, no, it was 118.77. So 118.77 is the low that it's trying to get into. We've hit 120.45 today. When you see large caps like that, folks, coming down into those areas and want to get to lower price, that's going to suck the whole market down. Big Blue giving it up again. You know, it's amazing. Big Blue, of course, they're buying back a lot of stock. It can't handle higher price. That's the bottom line. Caterpillar, we go over and take a look at Caterpillar. What we have with Caterpillar out here, she is down another 42 cents. She's off the high of 111. She's at 100.32. And it's down at those levels with expanded volume. What we're also going to see out here on a weekly basis is that you're going to see high volume on the daily, on the weekly. In fact, let's go over, we can put this up right now because let's see what these setups were for the monthly. Because the month was over yesterday, and it's intriguing. It's not much, really. If we take a look at the SPY, what you had is that, you know, your SPY, you hit a higher high, didn't have the volume, but yet you closed lower. No big deal on the monthly. It really isn't. If we take a look at the 3Qs, the NDX 100, we put this on the monthly. We take a look at that. Now that's impressive. The 3Qs on the monthly gives you a beautiful shooting star. That's negative in a huge way. The high out there was 97.51. The low was 93. The IWM, the small caps. We take a look at that small caps out here. We put that on a monthly. This gets really interesting. If you put the small caps on the monthly, you folks that deal with candlestick charting, that is a monster. Holy cow. So check this out, folks. The small caps, you get a bearish engulfing at a high that is taken up 3, 6, 7 months. That's intense. So technically, what that is, that's very unusual when you can get bearish engulfing that large, number one, to take up so much time. Number two, what you have is the velocity of this move lower. You know, the small caps basically have let us down. And the small caps, the IWM, we're at 110, 80 is screaming that it wants to be tested. So that's pretty intense. That's really intense, actually. 877-927-6648. You got the Dow right now down 30, Nasdaq's off 7. If we take a look at the Dow Industrials, and let's see inside the Dow, it's putting strength and weakness into them. There goes the financials. J.P. Morgan is off 89 cents. You get Big Blue's the culprit. Big Blue's down 236. American Express is off $1.09. You get Cisco off 25. Putting some juice into it. Procter & Gamble's up 252. We have Pfizer up 25. Boeing is up 58. You stay right there. This is Tom O'Brien. This is TFNN. Be coming right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow right now down 26, Nasdaq's off 5, S&P's are flat. We have gold up 11.90. You get silver up 6 cents. And folks, if you haven't test drove the Nadex platform, come over to our website at TFNN. You're going to see the banner on the top and the side. You can bring it up. They'll put $25,000 of funny money into your account. You're going to be able to see how dynamic these contracts are. Particularly what we have is nice volatility inside the markets right now. Now, let's go back to the S&P so we can see exactly what we have happening. We're going to use the SPY so you can see what's happening on the SPY. And yes, we are talking about intraday trading right now specifically. So the SPY, what have we done? Well, you did the full ABC price projection on the way down. You got into the 192.46. That level there, then we spiked at 10 o'clock up to 193.76. We got up there with 7.7 million. Now, when you look at the larger picture, you finish the ABC structure on the way down. You get a Friday. Bottom line, I suspect we're going to be lower into the close out here today. Not substantially, but lower. Intraday, though, what you're going to see, the last 10 minutes ago, we backed down on the SPY, and we did it with lighter volume. We're backing into a 9.1 million 10-minute bar. We did that with 5.4. Okay, so what that sets up, yes, like a little bed bug, it sets up just a test of that 193.76 area. Right now, we're 193.13. If we go over and take a look at the 3 Qs, just to see the correlation inside that. 3 Qs, same deal on 3 Qs. Okay, 3 Qs, what we did, let's see. So 3 Qs did 1.4 million going into 2.7. So 3 Qs also backed down, had a little bit lighter volume, rejected it. So 3Qs also can get to 95.34. If we go to the IWM, which is the weakest index out there, that broke. That's why the IWM, anytime and every time you can short that IWM, folks, you want to be all over it. The IWM, oh, look at this, another ABC down. Okay, so check this out. Now watch. I suspect by the end of the day, well, yeah, let's walk through this first. Your A point, conservatively speaking now, because when you're doing an ABC structure on the way down and way up, folks, when you have a gap down, which we had yesterday, what you want to do to stay conservative is use the bottom of the gap. So instead of me using the top of the gap, which would be 113.84, I'm saying the 8 point is 112.99. I'm taking the top of the gap. So let's say it's 113A. It's 111.16B. So you're talking about $1.90. Your C point out here is 111.94. So what do you have? You have a $1.10 intraday ABC structure on the way down. So how would you want to trade that? What you'd want to be looking for, and because you did break the B point on volume. We broke that at 10 o'clock. We did 1.6 million shares versus 1230 yesterday at 937,000. Okay, so you get an ABC, you get a confirmed ABC structure on the way down. What you want to see, and it's real possible we can get that because the S&P wants to bounce. What you'd love to see is you'd love to see the small caps bounce to 111.23. I know it's only 30 cents, but 30 cents in the context of intraday trading and then setting up the contracts inside the Nadex platform is a huge amount of bread, folks. If we go over to that S&P again, we take a look at the E-mini on the S&P. This is what we have. We are at right now 1927 again. Now remember, 1927 was the number, and that is the number from yesterday at 1550. That it's 1927.25. We got up to 1932, and what we're looking for is a test of that 1932.25 with lighter volume and a rejection of price. So we'll see how this is going to shake out. Right now, okay, so you get 8 minutes into this bar. This is going to be fun. I'd want this bar. Yeah, I want this bar to actually stop before it. I don't want it to hit it right now. If it did hit it right now, it'd have lighter volume. But when you're doing this, what I really like to see is this. When you get closer to the bar and you start out the 10-minute and you still can't make it, meaning that it makes it to the price point, but it fails on price and volume, when you started very close to the price point that you're looking for, that is showing you that, number one, you have a huge seller in the marketplace and the weakness is there. That's the bearish scenario. The bullish scenario, we'll talk about that, what you're looking for when you're a bull on something, and exactly how intraday they like to set up if, in fact, you think you're going to get an expansion topside and it will hold. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow down 9, Nasdaq up $1.50. S&Ps are up 2. We're going to be right back.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow right now down 22. Nasdaq's off 4. S&Ps are up a buck. And gold's up 1260. She's got a little traction. She wants to stay inside the higher range. And on a Friday, that's going to be quite successful, folks, if, in fact, we can see that as we keep moving into the day. If we do over to that gold contract, we take a look at it right now on an intraday basis. What we have happening in the gold market is this. If I put this on a... Oh, this is so cool. Check this out, folks. I'll put this on a 3-day first. Okay, so what I just did in the E-minis, okay, we're going to do in the gold contract. So you can see the correlations, how they work up. Bottom line, what have we done thus far? Well, the downdraft that was created yesterday, folks, at 0830, we did 13,900 contracts. Gold went from 1294 down to 1285, right? Well, check it out. We went topside today with 16,400. So your correlation is 16,400 into the 13,900. That is a market that wants to go higher. That's wide price spread. That's accelerated volume. That's building strength. Now, that is also after, and if I'm going to bring this over to the GLD, just so you can take a look at this GLD for a second. What you're going to see inside the GLD is that yesterday, the day of strength that we're dealing with in a gold contract is that's when the gold, GLD went from 122 up to 127. We did that with 24 million shares. Last night, we backed down with 9.8. So it's 9.8 versus 24 million. Today, we're at 2.4. What you want to see is that I want to see a close inside 124.36. Right now, we're at 124.56. And why? Because that is the larger range, meaning that it makes the run to the 129.21. And I suspect what we actually have here is that it wants to make the run up to this 133. And the 133 area is going to get you the 1390 gold. That's how that's set up. Don't forget, at TFNN, we have 10 hours of live programming every trading day. You can get all of that right on your cell phone at tfnn.mobi. If you'd like to get Tiger TV right on your cell phone, just go to tfnn.com. Want to see the TV right on the right-hand side? Just hit that button. After the races, you will get the audio, plus you will get the video. We take a look at the silver market, SIU4. So the silver contract out here, where is she? Where is she hiding? SIU4, SIU4. Okay, silver. So we have done, this is good for silver too. Okay, so check it out. So the silver break top side is $19.87. We made it to 2030 this morning. That 2030 is going into the 20.35. Oh, this is pretty cool. So check this out. This is a trip, okay? This is really cool. Okay. So we got under the low that was established on the 24th of July. That low was 20.35. We got to 20.3. We've done 30,000 contracts. Your volume characteristic, folks, is 59,000. On Friday, we're not going to do another 30,000. Most of the volume comes in at the beginning of the day. So what does that set up? Now let's put it on an intraday basis. Intraday, guess what? What do we have? We have a surge at the 0830, 9 o'clock. We go topside with 4,300 contracts. What are we doing now? First time we back down with 1,500 contracts. That right now, which is just a beautiful thing. Let me see how many minutes we got. And by the way, folks, yeah, I use 10 minutes on everything. It's just, they're consistent. And it's like, you know, let's put it this way. Do what works for you, meaning if you do intraday trading, whether it's 5 minutes, 30 minutes, but make sure you don't mix up the time frames, okay? After, you just want to make sure, because it will give you the same information. If you want to use the 30, use the 30. Use the 10, use the 10, 5, 1, whatever that is. Bottom line, what we have now is that you can see the volume is contracting dramatically. So what that's saying to me, you get a contraction of volume, you're pulling back into the high volume, spike higher. What that's going to do, two different things. Number one, we're going to be able to get a spike to 2058. We'll see if it has the juice, and if it has the juice, guess what? We're going to be right back all the way up to 2075 coming into that close out here today. So it's going to get really intriguing how we come into those levels, how fast we come into those levels. Now, let's go to bonds. Bonds are going to blow people's minds, and they're going to continue to blow people's minds for quite a while, folks. And okay, so let's look at it technically. Technically, what you have is this. The bond market couldn't even get to its swing point. When you can't get to a lower swing point, let me tell you something. You're going dramatically higher, not a little higher. You're going dramatically higher. Bonds couldn't do it. Couldn't handle it. Didn't even get close to it. And now what do you have? Guess what? You're in the higher range. You rejected lower price yesterday. Did it with lighter volume. Couldn't reach the swing point from the July 3rd area. The 10-year is on its way to 126. You're at 124.30. We're only a point away from it right now, which is just a total mind blow. It absolutely is. Because if you listen to the press, it's like money's not made in bonds. Folks, there's been so much money made in bonds, it's amazing, okay? 30-year. 30-year right now is up 6 ticks, 354,000 contracts. That level, just so you understand that level is at the highs that were established that we're dealing with of May 29th. May 29th high was 138.10. Your low was 137.08. We're over the low. Inside of that, what you're going to see out here, in fact, oh, watch this. Oh, this gets, watch this. When we put this on a weekly now, what's going to happen? Oh, this is going to be intense. On a weekly, what you're going to have, let me put this, U.S., yeah, look at that. Oh, my God. On a weekly, what you're going to have, folks, is that you get a total rejection. And this would only be it's like not even a retracement. The low on the 30 is we look at this, is 134.11. We got to 136.14. We're 2 points away from the low, which should just be a natural retracement or just keep it in a consolidation. What this is saying is that the 30 is not even in a consolidation. It's saying that, guess what? You get an ABC structure on the way up, and that baby's going to go to 142. If we go over to the TLT, so if you're taking a look at the TLT as to where we are right now, TLT has all the ramifications that you're going higher. Yesterday, 2 days ago, we came down to 12 million. Yesterday, it came down to 18 million. We're going to do about 7 million today. You're rejecting lower price. Do it on lighter volume. On a weekly basis, and we were benchmarking this this week anyway. On the weekly basis, what you have is that the 112.76 was the number. We hit 113. You couldn't even, in the TLT, you still couldn't even hit the highs of the low. How's that? That's pretty intense. And on the weekly with the TLT, so check this out. On the weekly, oh, this is an ABC up. Hey, you watch this, folks. This is sick. The TLT, oh man, I'm glad I'm looking at this. So check this out. This is about as deviant as you can get inside the marketplace. The TLT is an ABC structure on the way up. And I'll set this up for you right now. And this is on a weekly basis, by the way, okay? This is a weekly ABC up. If I take this, we set this up, your A point, I'm going to do this conservatively, your A point is 105.89. Your B point is 115, so you get $10. Your C point is 110, so that's a 120 A to B equals C to D. We've already taken out yeah, we've taken it out. The volume we had to take out, let me get this over here for a second. The volume we had to take out was 34 million. We got over the high with 46 million. It's a ABC structure up to 120. Now let me bring this back on a monthly basis. See what we have out there at 120. $132 is the high established in July of 2012. The low of that high is 125. That's where she's going. So watch this. We're going to May of 2013. We're going to that swing point. And we'll see what kind of juice we have when we get up there. But the bottom line is that you have the 20-year TLT and an ABC structure on the way up. You got a 30-year and an ABC structure on the way up. The only one that hasn't confirmed an ABC structure on the way up is the 10-year. And the 10-year thus far, okay, wants to get up and test that area, which is the 126. And it's just laying right underneath it right now. We're at 124.31. We'll see how we come into that area and see if, in fact, it can get the volume as it gets up and over that area. We go back to the the E-minis for a second and see what we have happening as we're looking to set this trade up. Right now, we're still at 126.75. Your benchmark out here that we're trying to basically throw this, and what we're looking for, folks, is a sell. I'm looking for a sell at that 132 area. And what we do, if you haven't test drove the Nadex platform yet, depending on what time we get that test, what I'd be looking for right now, if we, on the dailies, let's see. So if I'm, oh no, I see what I just did. If I go into the dailies and the S&P 500, 30 points. Yeah, see, the daily would be a good one. So this is why. The daily, if we get up to that, up to that 132, the daily would be good because it's going to be, there's a 1930 to 1900 in there. So your risk would be very minimal. That's what would end up happening. And then you'd get the time that's on your side also. So if we had done that right, if we do that right now, now's not the time to do it. Just to give you an idea, though, if we did 5 of them, if you did 5 of them right now, see, we're at 1926.75. We'd have to give up 1924. We'd be giving up about 2.5 points. If I did 5, you'd have a risk of $300, and you could make $11.95. What you'd be looking for a break even would be the 1923.30. What I'm looking for, though, I'm looking for that. I want that test. I want that spike up there. Why? Because, see, it's still sticking out. If you happen to be watching Tiger TV right now, what you're going to see is that it's not a high volume. Well, it's a high volume spike in the context of how we've been trading this morning. It's certainly not higher than the benchmark. And that's what, you see, the market's having that problem with that benchmark. The benchmark's 1927.75. If you trade these, futures, you want to stay cognizant of it. You particularly want to stay cognizant of these numbers now because they're hitting left and right. That number there, that's where it's having a hard time. But every time it's pulling back also today, you're pulling back with lighter volume. It's still telling me that, guess what? It's going to go spike it. You wait for the spike. That's where the market's going to talk, walk, and squawk. If the volume comes in, guess what? You don't sell it. That's it. You don't sell it. Volume doesn't come in, rejects price. Guess what? Then you're going to go over the Nadex platform, and I suspect what I'd be selling at that particular point is the daily 415. The top end of that is the 1930. Why? That gives you 30 points. And if we were at 32 up there, it would be your reward versus your risk would be pretty intense, because I suspect at that point, when you're out of the money, you'd probably be able to sell it for about 1929 to 1928, which you still need the aspect that, yeah, you get into under 1930 to start out with, then make up that other point and a half. But the other side of that, meaning, and I don't expect the S&P to be down 30, but the other side of that, you do have the aspect that if you get down 30, guess what? You're going to clean up and make all that bread. So the DAX, let's go to the DAX in Germany. The DAX in Germany is telling us a lot about where we're going to be going next week. DAX in Germany, even with us coming back, guess what? Can't handle it. DAX in Germany in 2 days is from 9,700 to 9,200. We're down $1.45 out here today. Your benchmark, your benchmark in the DAX is 89.13. February 5th was 9,071. She's almost at that point right now. Bottom line is that what you have out here is that the 89.13 is the next mark that this little baby wants to get into. There's a question in the den. Do you think we'll test the low of 1911? No, we'll go by that low. I don't think we'll do that today. No, I don't think we'll do that today. What you have, when these ABC structures finish, they like to do something else, So what I expect you're going to get, and this is deviant, to me, this is deviant for the bulls beyond belief. What this does is that this market calming down like this, that's just enough that the bulls won't sell. They should be getting out. The bottom line, folks, if you had this expansion up in a dramatic way, okay, get your stops in. Just take your money. If you leave your money in the marketplace, going to take it. Yeah, that's the bottom line. Okay, so in the context of where we are right now, I suspect, let me see the ESU. We can close, we're going to, you stay right there. We'll come right back, folks, and I'll get you that number on that S&P. Let's say about 1918. 1918, I suspect, will close out. We're going to be right back, folks. You stay right there. This is Tom O'Brien. This is TFNN. Check out the Nadex platform right at the front page of TFNN.com, folks. We're coming right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We have the Dow right now down 23. Nasdaq's up 9. The S&Ps are flat. And don't forget, folks, at TFNN, we broadcast each and every trading day. Live content, 8 in the morning to 6 in the afternoon. Get all that programming right on your cell phone at tfnn.mobi. If you'd like to get Tiger TV, just go to tfnn.com. On the right-hand side, you'll see the TV right there. Just hit it. And if you do enjoy the program, folks, please tell 3 people. We really appreciate it. Bottom line is that there's a lot of great programming out there. We have volatility in the marketplace. The way that the setup is on Tiger TV, of course. You can see these charts. You can see how these high-volume highs and lows just stick out like a sore thumb. And bottom line is that what we're going to see out here for the next few months is high volatility. I don't expect that's going to change. The benchmarks that we have are pretty dramatic in the context, folks, of actually how we went up and where these benchmarks are on the way down. Like if I just take the SPY, so you can take a look at these benchmarks and how they're sticking out, it's dramatic. It's not in a small way. Your first benchmark on the weekly basis is April of 2014. Now, we're at 192. That level, folks, is 181. Your actual benchmark, which we've been talking about for quite a while, is February. Now, February, when you take a look at this and you really understand how markets move, February is 173. That's folks, people are going to be screaming. But that's normal. That's what's so crazy. That's normal. So that's 173. Now, how we come down to that level is going to tell us do you actually go down? Because the other benchmark that's laying out here is 157. 157 was the lows of June of 2013. So if I take a look at this and I'd say, okay, that was a 2-year basis. If I want to put that on a 3-year basis, what would it mean? Well, when you take a look at this on a 3-year basis, we have gone up almost 50%. And we did go up 50%. Actually, it's more than 50%. It's almost 100%. So if I take this back to 2011, it was 114 up to 198. Well, I'm going to take this now and put this, that was a 3-year. I'm going to put this on a 5-year monthly to say, okay, what sticks out? Well, this is where it really gets scary, folks. What sticks out is this, is that your first benchmark is October of last year. That's 177, the high of 177. I'm being kind, though. The second one is 165. Depending on how we come off this high, meaning the month of August and September, if we come off this high with high volume, guess what? This is going to be a disaster. What it would set up is 130. Yeah, 130, 60 points down from here. Because 130 is the place that you have the most amount of volume on this whole chart. If we go over and take a look at the 3 Qs and we do this correlation inside the 3 Qs, it's like, okay, what can bring it down there? Hey, you know, bottom line is that you could make the argument what brought it all the way up. We take a look at the 3 Qs. What you have is that we're at 94. It's going to take quite a bit to break 83. So the NDX 100 itself, it's going to take some juice to break the 83 mark. However, you break that mark, and then guess what? Your characteristic comes all the way down to $58. The IWM, the small caps, we take a look at the small caps. Small caps are the weakest in the marketplace. Small caps have this monster bearish engulfing setup. We're at 110.70. How we get under the blows my mind how quick an hour goes. What a bummer. Okay, you stay right there, folks. We get our man, Mr. Basil Chapman, coming up next. Then Nico Page going to keep you healthy. Darrell Martin, Dave White. I'm going to be back 3 to 5. Have a great one, folks. Have a safe one. You stay right there for Basil. Dow down 34, Nasdaq off 13, S&Ps are down 1.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.